the wall of private debt and private equity market money looking at emerging markets is probably more a reflection of those having been successful strategies in the developed markets. But in the United States, you have a framework where if these things go wrong, there's a certain treatment under the bankruptcy code. If there is a default or Chapter 11, the management's fiduciary duty goes from the shareholders to the creditors. The courts recognize the creditors are senior in the capital structure. That doesn't exist in most emerging market countries. The courts, in fact, quite the opposite. The courts will be a bit more beholden to the shareholders and not to the creditors. So on the private debt side, more often than not, when you get into a difficult situation, the creditors can get wiped out and the equity holders come out holding the company in some form. It doesn't happen all the time, but it is a risk. Have you been actively buying Argentinian debt in the wake of the swoon with the IMF considering to give them more money? So I kind of have grown up in these crisis environments which may lead to a debt restructuring. So if I'm not involved in Argentina, there's something wrong. And the fact is, we are completely involved. As soon as the crisis started, which started really, there was this kind of gradual grind down in asset prices until the first round election, the PASO. The gap that Alberto Fernandez had over Mauricio Macri was much larger than anybody had predicted in the polls. So I was on a plane to Buenos Aires before the week was out, and I went to talk to a lot of the people who work with Alberto Fernandez, because those are the people that I sat across the table from negotiating the restructuring back in the mid-2000s. The reason things sold off so heavily was the fear of these people coming in and reinstituting the policies of Nestor and Cristina Kirchner. What I can say is, my takeaway is that's not their game plan by any means. They know they need market access. The economic possibilities of the country are dependent on market access, and they know full well that they can't go scorched earth with creditors again in order to have that market access. So that's a very long way of saying, yes, we've been buying. Okay, so which instruments do you find most attractive here? Because all Argentinian assets have sold off. Sold off, yeah. Well, we're debt guys, and I'm a distressed guy, so the cheaper something's gotten, the better off. But we've been pretty prudent about deploying into some of the provincial debt, the city of Buenos Aires, which never restructured at all, but also things on the sovereign curve. To China, this has been one area a lot of people are saying there are tremendous opportunities, especially in the distressed world, right. Particularly as the PBOC and the party allows companies to default for the first time, right, and actually have distress. Are you getting involved? Not yet. The prices haven't collapsed. We're seeing some spotty activity where things will gap down. We've gotten involved in a few things, but it's we're not China experts by any means. But anytime there's a crisis, you sort of recognize the patterns. The few attempts we made to really work on the ground there were difficult. There's a real sense. Any country, there's a sense that there's a bit of an insider's game. In China, clearly, it's very difficult to push back. One thing that's marked this post-crisis era has been an incredible amount of debt that's been sold around the world, but particularly in emerging markets. And we've seen this from everywhere. And I'm just wondering whether you see an opportunity brewing for you, who focuses on distress at the next downturn, which could be sooner than later, given the fact that people are predicting some sort of recession globally by 2021. Always a trick is when you get that kind of a turn. We have to stay invested. That we generally have historically done much better on the way up. So you take your mark-to-market hit. Yes, the short answer is yes. There's a wall of debt there. We don't need to be in the business of predicting the next crisis. We just know that there always will be one, and there's much more to play with than there has been in the past. What do you think is the biggest thing that emerging market debt investors right now are getting wrong? Emerging market investors tend, very often, the biggest blocks of money that move are tracking indices and are not paying very close attention to the the structure of the debt that they're buying. So there's a lot of change in the enforcement language in the bonds. So it comes, you end up getting these weird curveballs, something like in Argentina currently, if they do a reprofiling that uses the aggregated collective action clauses, does that constitute an event of default? So the lack of sort of deep knowledge on the structure, and then also, your point earlier, so much of this is political. And we have a lot of people who are crunching spreadsheets and not a ton of people who are paying close attention to what's going on the ground in these countries.